In this video, we're going to talk about why you should stop buying the dip. Accumulating more crypto is generally a good idea, but this is not always the best strategy. I mean, how many times has this happened? The crypto market is way down and your portfolio's on life support, but you think, fire sale, I'm loading my bags, and then right after you buy, another monster sell off happens. Well, we've all been there before, so before you smash that buy button, watch this video because I'm going to show you how to decide if buying the dip will up your gains or land you with a part time job. Let's get it. Welcome back. My name's Jim, and I'm just going to say it. Buying the dip has basically just become a meme in cryptocurrency. It's gone from somewhat of a strategy to what everyone thinks you do whenever the price drops. And I mean, I get it. Fundamentally, the idea is buy low and sell high. So if the price goes down, I'll buy. And then when it goes back up, I'll sell it. So if the price goes down, I should buy, right? Well, not necessarily. And if yes, maybe not just yet. If you're buying just because the price is down or because some broke internet troll posted on X about how you should buy the dip, you likely have no idea how far the price could drop, and you might be about to find out that the dip ain't done dipping yet. The mentality is often if it goes down more, I'll just buy again. And okay, fair enough. But if you buy and the price drops 20% afterwards, it needs to go up 25% just to get to where you bought. And that's just a Tuesday in crypto. If the price drops 40%, it actually needs to go up 67% to get to the point that you bought. So here's the point of this. You're killing your potential gains, or maybe even worse. So let's zoom out for just a minute. Do you know if we're in an overall uptrend or downtrend? Now, I'm going to talk about how to identify trends in just a minute, but I want you to understand why it matters. If we're in an uptrend, the dip is likely a correction before we continue back upwards, so it's probably okay to buy as long as you pick a good level to purchase at, and then be sure to take profits when we go back up. But if we're in a downtrend, it's probably not a good time to buy because it's likely that the trend will continue downwards. I mean, after the 2021 bull run, we had an almost 2 year downtrend, followed by many months of sideways price action. Can you imagine continually buying that dip? And most cryptos don't survive a bear market at all, so if you're in the wrong ones, you can't even recover your losses later on. Okay, so we need to talk about how to identify the trend, and we're going to look at the charts in order to do that. Now, we're going to look at least the 4 hourly, but definitely the daily or weekly time frames. A lot of times you'll see people post screenshots. Oh my God, what happened on social media about a big red or green candle on a chart? But it's the 15-minute chart and it's just over exaggerated. And it really doesn't do anything for you unless you are day trading. So we're going to look at these longer time frames when it comes to determining a trend. So in an uptrend, we're going to have consistently higher highs and higher lows. And we're going to draw a trend line connecting the lows of the price swings in a rising market. And the trend is up as long as the price stays above this line. So in a downtrend, we're going to have consistently lower highs and lower lows. So to draw a trend line, we're going to connect the highs of the price swings in a falling market, and the trend is down as long as the price stays below this line. Just because the price breaks above or below the trend line doesn't mean that the trend has changed. It just indicates that it might be happening. Personally, I'd love to see a retest of that trend line. So let's say we were kind of going downwards and we break above the trend line. I'd love to see a retest of the candle coming down, hitting that trend line, and then continuing back upwards in confirmation would definitely make me feel better about a trend reversal. If you're serious about being successful in cryptocurrency, you really have to learn about technical analysis like candlesticks, patterns, indicators like volume, RSI, and moving averages. Now, I can't teach you TA in this video, it's just too vast of a subject, but I'm going to share one more easy thing to take a look at that will help you determine if you should buy. What I'm showing you here are structural support levels. This is a way to make a quick assessment at a glance as to how far the price might continue to drop before it finds any support for a reversal. So these levels are places where the price often got rejected on the way up and came back down and had to make a breakthrough before going higher. And it's also likely a place where the price will find support as it comes down. As you can see, buying the dip can be a great way to pack your crypto bags, but it can also result in you riding a downtrend way too far and maybe even losing all of your investment. So implement these easy tips to help you make better buying decisions. Be sure to hit that like and subscribe button, and I'll see you in the next video.